Hey, what's going on? Welcome back to my channel, and in this video we're going to be taking a look at Polygon Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. And if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. So taking a look at the daily chart, we have a Fibonacci retracement set up from the swing high all the way down to the swing low. Now we have the swing high set up in December 2021 and the swing low in July 2021. And as you can see, we have our extension levels to the downside, and the 1.414 has been met back in June last year. So 33.5 cents was your technical target, and that was perfectly met. From there, we saw a massive uptrend. We were able to trade some of this. We got in at, I think, roughly 33 cents here into Polygon Matic. And then we rode all of this up and we took profits at around about 80 cents, I believe. And now we are seeing a move back down, as you can see. And the question is, where is the bottom? Where will we bottom out with this correction? So the immediate level that I want to point out is obviously 41 or almost 42 cents here at the 1.272. You can see this also aligns with the resistance that we had here back in March 2021 at around about 42 cents as well. So there is some confluence in this level. And if you take a look at the smaller fib that we have on the chart, if I remove the larger one so it's easier for you to see, we set up a fib from the swing high in July this year down to the swing low in June this year. And as you can see, we are starting slowly but surely to make our way down to the 1.618 here at 47 cents. And that is our technical target of this fractal. But as you can see, the second fib level, which is the capitulation target, is sitting at roughly 41 cents. And if I bring back the large fib, you can see that the second fib is exactly where the 1.272 is of the larger fib. So this area over here is going to have a lot of demand if we do drop down into that zone, because not only are we retesting this little support that we created back in June 2022 and the resistance that we created here in March 2021. Now, if we do continue dropping, then of course you have the 1.414 sitting at 33.5 cents, which is essentially our bear market bottom at the moment. And we don't know if we're going to be dropping below that or not. Now, in the case that we actually drop below, which I don't think is going to be happening, but it is possible, we're going to be dropping below the 1.414, and let's say we need to look for the next support. So it is going to be 24.5 cents. We could potentially see a black swan event with a massive flash crash, and you can potentially expect a lot of altcoins to have these large wicks to the downside. Polygon Matic will be no different, and a wick to 24.5 cents might be on the cards, but that would be a very bearish scenario. For now, I would target the bear market low here at 33.5 cents. That would be the ideal entry point. Even if we do dip a little bit below that, not a big issue. You're still getting a very, very good entry point. But that is if we are able to do that, right? If you want to know whether I'm buying Polygon Matic or not, feel free to head into my Patreon. The link is down below in the description. You can get 7 days for absolutely free. You get access to all of my content, and you get access to all of my podcasts, all of the low cap gems, all of my trade alerts and my portfolios. So feel free to check it out. But moving down to the EMAs. So we have the 55 EMA and the 20 EMA on the chart here. And you can see that the 20 EMA has been acting as a massive resistance level throughout this downtrend. You can see we're back testing it as resistance as we go down. And we did pump here in July, but that was the top of the move. We reached approximately 90 cents and then we started dropping. And every time you hit your head on the 20 EMA, you get sent back even lower. Now from the July low, where we have retraced approximately 44%, which is not bad for a high cap. This is a good area to start accumulating. potentially we are starting to print some sort of a double bottom pattern here, which could be a really bullish sign, because double bottom patterns are usually a bullish reversal pattern. And you can see that the potential target that we may be looking at here, so from there to there, we are potentially going to be looking at 59 cents, which will take us back to this August 2023 high. And from where we are right now, that will be a 12.7% trade. But that's only if we are able to break above the neckline. And the neckline is right over here at 54.5 cents. That is our neckline. That is a massive resistance level we need to be breaking in order for this pattern to be valid. Otherwise, you know, this is just a potential pattern that we're looking at here. So we actually have to physically break above, hopefully back test it as support as well, and then we can head to our technical target and take that out. So that's a potential pattern you're looking at right now. And let's switch over to the weekly chart and see what's going on over there. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at the weekly chart, we have a Fibonacci retracement set up from the swing high in June 2022 up to the swing high in December 2021, and you get your technical targets to the upside. Of course, this is with the assumption that this June 2022 low is actually our bear market low. If we start dropping below that, the fib is invalidated. We also have a smaller fib with the swing high in July and the swing low in June, slightly different from the one that we just had on the charts, because this is the weekly, so the candle closures are slightly different. And you can see we're actually retesting our 1.618 target, which is our technical target based on this fractal here. So based on this fractal over here, we have actually reached our technical target, and we are good to see a retracement from here. Now, I do have to point out that we are very overextended from the 20 EMA on the weekly, so a potential back test of that is on the cards. That's a 26.4% to the upside. If we manage to start pumping, you might want to consider a swing trade, but if you're looking for long-term hodling and staking, that's also fine. That's what I'm looking for. I'm only going to be swing trading when it's absolutely obvious that a project will be dumping. For now, if we do get a retracement back to the 20 EMA, I would not be taking profits because we are very close to the bear market bottom. I do not want to sell right before we start pumping. Don't worry, you'll have enough time to sell, I promise. Let's just be patient with our tokens. Let's be patient with the markets, and let's try to use all of this time to accumulate and learn as much as possible in order for us to be fully set up and ready for the bull market. Taking a look at the weekly chart, you can see we are bottoming out in this red support block. On the weekly RSI, I meant. We are bottoming out in this red support block, and this is a very good accumulation zone. The last time we were down here was back in June 2023, and before that back in July 2022. So, or actually it was June and July, and you can see we saw a little bit of a back test of resistance there. Then we broke above, and then we came back a year later and we back tested this zone twice right now, and as you can see, the RSI is starting to recover from this area, and we had this set up a long time ago, even before we dipped there back in June 2023, and this is where I would be accumulating. Once again, if you want to know where I'm buying Polygon Matic, feel free to head to my Patreon. We also saw a perfect backtest of resistance here of this yellow resistance trend line that we lost in May and then backtested it in July. So potentially, if we're going to be seeing another retracement, another relief rally by the end of the year, we might be running into that trend line again and then seeing a move to the downside. That is also a potential play. But that's obviously some speculation there for you. I don't know what's going to be happening. What I do know is that when the stochastic is sitting this low, this is where you want to be accumulating. And you can see this is very much reminiscent of this January 2022 to June 2022 consolidation that we were in. And very similarly here from April 2023 up until September 2023, we are accumulating in this zone. And the price is actually sitting at a very nice area as well. So all things considered, this is a very good entry into Polygon Matic. From the actual bear market bottom, we're only up approximately 62%. So this is still a very, very, I would say, early in terms of entering Polygon Matic. I think it's going to be doing massive during the bull market. Now, I would be looking out for this bullish cross on the weekly MACD. This could actually signal the potential bottom for us because the MACD would actually be confirming the uptrend. So we would have to continue with this green weekly candle here, potentially start moving to the upside. After 6 straight red weekly candles, we are going to be looking for some breathing air, for some relief rallies down the line. So if you still haven't picked up any Polygon Matic, please consider this as a potential project to start accumulating, and this is obviously not financial advice. So once you get that bullish cross, potentially the uptrend will have already started. And as you can see, the last time we had this bullish cross was back here in July 2022, and the massive rally that we had since then is could have made you some money if you were looking to take profits, of course. But if you're like me, waiting for the long term, then we need to be waiting for this yellow resistance trend line to be broken. As you can see, it was retested twice already. And once we're able to break above that, I think that's when the bull market is going to be, as close as it can, and this will be one of those precursors to the bull market. I think this might even happen sometime in early 2024. So once we break above that, I think Polygon Matic will be entering a bull market of its own, just like it did over here back in 2022. So that's pretty much it for my Polygon Matic analysis. I want to thank you all for watching this video. Let me know what are your bull market targets for Polygon. For now, my target is $10. Based on this Fibonacci retracement, and in terms of market cap, that is looking like a possibility for this project, especially if you consider all the partnerships they're having. So I want to thank you all once again. Stay safe and have a great day. Bye-bye.